The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Having a little trouble here. I posted the charts for the DAX and also for the FTSE, but they didn't go through. I wanted to post the one that I'd like to talk about first this morning, and that is the Turkish lira. I hope that comes up. I'll wait just a second and see if it's coming up. If not, then I'll have to figure out what's wrong. But I did post 3 charts, and I don't know if they're coming up or not. Would you folks let me know if you see the chart of the Turkish dollar in there, please? Just to make sure that you see. Yeah, there we go. Okay, we're all right. Okay, the reason why I want to talk about this, folks, the Turkish lira is not a very widely traded cross rate against the dollar. It isn't. But I want you to see what happened in 2017 when it was trading roughly at 4. In other words, it was 4 Turkish lira to the dollar, and now we're trading at 7.3 Turkish lira to the dollar. The dollar is strengthening strongly against the Turkish lira. You can see how it's collapsing now after we went below the lows of 2000. It just keeps dropping and dropping and dropping. The key level, from my opinion, because I have a friend over in Istanbul that is a forex trader, when we were up around 4.95 during 2018, that was a 382 retracement, and then you can see the 61% retracement in 2019, and it continued down. But here is why I'd like to chat with you about this. When currencies collapse like this, like they do in Turkey, that affects what they have to buy. And look what's happened to the Turkish lira. If the people in Turkey who love gold, look what they have to pay for gold. This is, you can see here during 2017 and 2018, they were paying the equivalent of $4,000 and $6,000 an ounce, $8,000 an ounce, and look now they're paying $14,316 an ounce in the lira. So now that's not happening, to us. But if the U.S. dollar should break down, and remember, we're at that really critical level in the U.S. dollar. Let's bring this up because I think that's something that is going to be, talked about years to come. Because if it does fail, then you're going to be looking at something that is really sinister, and it would explain why the stock market goes up every day without even backing off. Maybe someone has an idea that that's what's going to happen. I don't know, but we've certainly climbed the greatest wall of worry ever done in the stock market. I had 2 emails over the weekend saying, why is the stock market going up? And I give them my usual response. There's more buyers than sellers. That's really the bottom line. More people are buying it than more people are selling it. So that's what we're looking at. Now, we have something really big happening this week, and I want to go through it because it was a big part of my education into the markets as far as it related to astrology. But I want to bring to your attention here because this is a graph of the Bradley-Sidera graph, which is done by Donald Bradley. You'll notice here on March the 17th, that the market actually bottomed on the 23rd. We had a high on the 11th. If you'll remember, then we backed off a couple of weeks, and then we've gone up here until this week, and this is August 19th. We have a new moon, and we have a Bradley market turn. Now, the only reason that I'm bringing it to your attention this time is because it's fitting perfectly. And when the Bradley finishes perfectly, fits perfectly, do not fade it, because that means we would have a market that would go down, not straight down, but would go down for probably 5 months. And all I'm saying is pay attention to it. Let me explain to you how I got interested in this, because it was 1986 and I was in Avila Beach, California. I had just gone up there. I was still doing expert witnessing, and I had turned my license over to Bateman Eichler, so I was working basically as an office manager, and I had my commodity broker's license, and so they needed those, and so that's what I was doing. And Dr. Miller had written a little note to my aunt that was running Louise's restaurant there in Terre Haute, Indiana. And so she would eat there 2 or 3 nights a week with her husband. And so she left this note saying, beans, November beans or August beans were going to close at such and such a price. And I wish I'd have kept that piece of paper. And call me. And by golly, when August beans went off the board, I looked at that little note that I had stuck on my Cotron monitor, and she was within a penny of the exact price. And she had given me this at least 6 weeks, probably 2 months before it happened. So I called her up and I said, Ruth, I said, what do you have? She said, well, she says, I see where you're looking at these Fibonacci numbers and stuff, but these are related to astrology, and I think I can help you. And she said, why don't you come down to Florida during the holidays, Thanksgiving and Christmas, and we'll look at this stuff, and you can stay as long as you want. We've got a big house here. And so I looked at that and I said, well, that's it. And so within the next couple of weeks, I was on my way to Sarasota, Florida, and I stayed with her and her husband all the way through Christmas. I came back, I believe, on the 27th of December. And I had so much information I couldn't. But the first thing we did when we got there, she pulled out this little book. It was I think it's about 45 pages, called Stock Market Prediction by Donald Bradley. And basically what he did was he said, you can predict what the stock market is by looking at these planets and how they're weighted. Each one is weighted by a special weight that was done by an astrophysicist at Yale University. His name escapes me right now, but I said, okay, we looked at 1 or 2 years. I said, well, 1 or 2 years is not going to cut it. I said, I have to look at least 100 samples. And so first thing I did, call Twentyman. And I said, Jim, have you ever done this? And he said, nope. He said, I'd heard about it, but I haven't done it. And I said, well, how about we try to get the data? And we had the data easily from Neil Michelson down at Astro Computing. And so we took every year we could get, which started in 1885, and we tested the model by looking at how accurate it was for the year and how accurate it was at the turning points. And it really was very, very accurate. Well, that got me really excited because I could see a situation where you could predict what it was going to do within limits. And so that's how I got started doing it. As soon as I got back, as you know, I put that book together, Astro Cycles: A Trader's Viewpoint, which was my first book. The first thing I did, I stacked up everything, in little piles all over the house, and then I realized that I had to put a book together, and they were having a New Year's Eve party at the university there at Cal University in San Luis Obispo, and what was her name? Pam Both was in charge of the English department. I'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I'm talking about the Bradley stock market model done by Donald Bradley back in 1947. And, folks, he only did 1 year. He did the year 1946. He predicted it and then wrote the little pamphlet in 1947. Hardly anyone had ever done anything with that. No one had done anything with that, and still I started doing it with the Astro Cycles newsletter in 1987. But, once it started to see how accurate it was, I mean, everybody started it now. I don't know how many. You can go on the internet and stay for 2 days with people giving their ideas of what the Bradley model is doing. I followed it exactly like Donald Bradley did. He gave weights of all these things. It was done by a PhD and astrophysicist from Yale, and it was amazing. I mean, some of those years in 90, 91, 92, 93, I mean, those were just absolutely, you really did have a view of what the market was going to do. And I was in the top 10 in the Timer Digest and all the time, but that was really what I was using, was the Bradley model. But the trouble is that it does flip. I mean, it inverts. Now, I wanted. Duffy's asking a question. Does the y-axis on that chart signify relative values? No. All it's doing is it's weighting all of the 9 planets, and it's giving them a weight, and each one of those weights is what is relative, and that's what it does. It has nothing to do with price. And here's what I want to show you, because here was last year. Here's 2019. As you can see, the turning points. There was one in August and one in June, and then there was the one. If you look down at the bottom, you'll see the bottom there. The one that was the top in the market, but the market was inverting at that time. It was topping and not bottoming. And so that means that is inverting. Now, Norm Winsky has done some work, with this as far as the retrograde of the planets. And hold on, someone's got a question. I did post 2009. Why aren't they posting? Shut the front door and raise the rent. Let's try it again. Hold on again. See if I post it again. I evidently have to post them twice this morning. But what we did, and I've got all those years, and the problem is I look for those on the big computer. I've got a giant computer back here that I paid like 11 grand for many years ago. That's got it still works pretty good, and it's hooked up to these 250 inch. What do you call these widescreen monitors? And I tried to find it. I went through and I searched and I searched, and I know they're in there, but I couldn't find them. I just got frustrated. So today I'm going to get someone who's much, much smarter than me to pull those out, and we'll look at a few other years, because it did call the crash of 1987. That was one of the reasons why I was bearish there in August of 87, is because the Bradley model turned down in September and said there was going to be a big move down. I mean, it was a huge move, and it flat out worked. Hey, the reason why I'm bringing it to your attention, folks, is let's pay attention to this week. It's very simple for you guys that are investing for the long term and stuff. If the market closes lower this week, that's probably right, and it's probably going to drop. And since we've been up for so long, we've been straight up since March 23rd. Since March 23rd, we've been up April, May, June, July, August. We're up 5 months. Maybe we could reverse 5 months and go down to December 2nd. That would put probably the death knell into the little elephants winning, but you never know. Anyway, let's move on here to a couple other things that people have asked about. The main thing today, folks, is to watch the dollar index very, very closely, and then also watch stocks very closely this week because of the Bradley indicator. The Bradley indicator, when it's right, folks, there's nothing any better. I mean, I'm at the 8th furlong pole, and I've seen a lot of stuff. I've seen GAN, and I've seen a whole lot of stuff, and I've never found anything better than Bradley. The problem is it is not 100%. It's good on the dates. The Bradley dates are pretty good, but when the whole thing's added together and doing it the way Bradley did it, it does a great job. And I have over 100 samples going back to 1885. That's when the New York Times started to show charts every day. Not charts, but they would show prices, and you could get the indices to find out what the actual stock market was doing. And then the Bradley is a simple little book. I mean, when I bought the book, Norman paid a dime for it. Norm Winsky paid a dime for it, and we should have him on the next time, and he can talk to his experience about the Bradley. And but he paid 10 cents for it there at the bookstore in Terre Haute, Indiana. I got mine from Dr. Miller, and that's what I did. But I was the first one to. I think some people published it in Rocky Mountain Times and stuff like that, but I did it every week, and but I'd always give a idea of what the market was doing. Then when the markets went crazy starting in 1995 with the beginning of the internet, we started to see markets that would go vertical, and so the Bradley you wouldn't get the same type of perfect overlay that you got during those other years. And the reason why I'm talking to you so much about this is this has got to be perfect, folks. The market has to turn lower this week. I mean, if it's higher as we come in here to the 21st of August, that's 3 days past the Bradley date, then something is wrong. So that's why you want to pay close attention to it. That's the real reason that I'm bringing this to your attention, because you're probably going to start seeing things on the internet about it, and the main thing is it's got to start working. And then, but if you close down this week, especially if you topped on the 19th of August, which is the new moon and also the Key Bradley date, I don't know what. It costs $90.49 for the Bradley book. Are you kidding me? Wow! Anybody that wants that book, drop me an email, and if you'll make a donation to the to the mission, to the gospel mission, I'll send it out to you. Heck, I'll send it to you for $15. I don't want to. I can't believe it. $90.40. I guess. Are you kidding me? Oh my God. And that's probably an original book. I have it on PDF file, so we'll see. Anyway, it does a great job when it works, but when it doesn't work, it doesn't do a great job. So remind yourself that, and that's why we got to pay close attention this week, is because we are over the major things. Now look what's happening here, folks, with the Wilshire 5,000. This is the broader index than the New York Stock Exchange index, and as you can see here, we had this big outside day in the Wilshire 5,000. Now, if that's going to reverse today, that's not a bearish bar. But if it reverses, if it keeps that reversal in, then that is a bearish bar. And that's why you have to pay attention to it, because that's 5,000 stocks. Now, the New York Stock Exchange Index has, I think, 2,100 issues of the most actively traded and highly liquid stocks in the world. But what's that? 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone asked the question, why don't I talk about the Bradley model more often? And the reason for that is, folks, there's a lot of smart people out there that I use to help the folks here at TFNN. One of them, of course, is Shane Smolian, who's on quite a bit. We also have Tim Boss. We also have Norm Winsky, Bill Meridian, and they all use that stuff, and they're far better at, and Arch Crawford. They're far better at that type of thing than I am, folks. I keep this as simple as I possibly can. I try to be a rocket scientist. I helped Werner von Braun get started down at the NSA, many years ago, and I helped with starting the first computers, many years ago back in the UK. But I lost interest in that stuff. Of course, I helped Steve Jobs with Apple and a few of the other things that I've done. But the astrology things has left me a little bit. So I try to give information from people who are a whole lot smarter. My mom told me once when I first started college, she said, hang out with people that are a lot smarter than you, son, because you're going to need some help. And that's pretty much, no, I wasn't involved with Roswell, but I did start, looking at this stuff. You guys are going to think I'm on drugs. Hey, I might be, but I'm not on drugs today. My allergies are pretty much out of the way, but we'll see what's going on. And we'll see yes, Al Gore. I helped Al Gore quite a bit. Anyway, the reason why I don't do it, folks, are people smarter than me and have better information. All I know is I've looked at the Bradley for a long time. Twentyman looked at it, and he wouldn't look at anything for less than 100 samples. And so that's how we got started looking at it, and we watched it. And Jim doesn't even keep it up to date. But what we did was we did it exactly like Donald Bradley said to do. Now, Ensign put it into their program, so I have it to look at. But I watch the key dates. But, folks, I basically look at patterns and ratios. Those are the things that lead me to where I want to be. So I keep it as absolutely as simple as possible. Okay, we're opening now. We want to open sharply higher in the stock market today, and we are. Yep, we got up. Well, we got that gold up to 79. That's a key level to look at. The gold looks so bullish, folks. Last night we just got down to 1940, and now we're trading, $40 higher, and it looks like we want to go a great deal higher. We're trading at around 33.78. If you remember, that was a key level on Friday, and I believe that's going to be the key level today. We could easily get above 33.90, but I don't think it's going to mean very much. But again, I'm looking at what could possibly happen this week. I posted the index for New York Stock Exchange index, and as you can see, with our stock market up sharply this past week, the New York Stock Exchange index was down, and that's basically telling you that momentum is starting to drop. Let's take a look here at the NASDAQ, and you'll see that even the NASDAQ is starting to slow of momentum. So let's pay attention to that, because it might be an indicator. And remember, we're just looking at charts and numbers. We're not reading fundamentals. We're not listening to, what the news is trying to tell us, because if you do that, you better have deep pockets, because they are most probably going to give you some misinformation along the way. Regarding that U.S. dollar index, folks, that is extremely important because of what happened with the Turkish lira. What could happen with the Turkish lira could happen to the U.S. dollar. And if the U.S. dollar breaks down below that 92 level, that's going to be equivalent to what happened when the Turkish lira broke. And these charts act alike. And that's why you get your information from them. If one chart acted one way, then the other chart acted the other way. The good part about being a technician is you don't have to worry about all the noise that's in there. You just look at that little bar, and if the prices go up, there's a buyer. If prices go down, there's a seller. You don't know what's going to happen next, folks, and that's why this business is so much fun. Nobody else does either. Your job is to determine how much do I have to risk to see if I'm going to be right. It's all about risk control. And you have to determine what that is. It's that 9-inch cycle. That's the cycle you have to worry about. That's the cycle between your left ear and your right ear. On most people, it's 9 inches. On my head, because it gets a little swelled sometimes, it's about 14 inches. Who knows? But anyway, we have some serious things happening in the stock market with divergences and, markets acting extremely different than what you would expect. But there's others that are giving you indications that there's something that's not right. We posted this several weeks ago, the ABCD pattern here in Netflix, and we had the 382 retracement a week ago, exactly up there at 910, and the market has broken down, and we took out the lows of July, and we have this really quiet 4-day rally. Now, my opinion is, I think Netflix is not going to be doing well. I don't know what it's doing today, but it's in trouble. That's the one. Everybody's watching Apple. Nobody, cares much about anything else because Apple just keeps going up and up and up. And maybe it'll go up forever. That would be a good thing too. But the main thing is that you got to pay attention to what some of these stocks are doing. Microsoft doesn't look that good. Google doesn't look that good. Amazon still looks pretty good, but the Netflix, that looks worse than any of them. Of course, Tesla is starting to lean over a little bit too. So that's all I'm doing is showing you these charts, folks. Let me tell you a little question. This is 2000. I started doing this for TFNN in the winter 2007, the fall of that year, if I were doing this back in 2000, I would be saying the same words. We had Global Crossing, WorldCom. There's just a few of them. Sycamore Networks. All of these stocks, they were doubling in price because of potential sales. They didn't have any earnings. Most of them didn't have any sales, but they would double in price on potential sales. Not sales, but potential sales. And, you're seeing some of that in some of these stocks because that's it. Pets, I don't know, pets.com. I'm not a pet person, so I can't really rely on that, but that's it. Now, I was going to have Rich Anderson on the show today, but he's a little bit big. Yeah, JDSU was one of them. There were so many of them, you could probably, the NASDAQ gave back 88% of its value between 8,000 and 8,003, and then, of course, it went back up again, just like it always does, because the tech is where the action is, but it can have some pretty good things. Okay, Michelle is asking, do you think gold would continue higher with the stock market? Michelle, the stock market and gold are totally two different things. The stock market, I don't know how much higher it's going to go. Gold, I think, is going to go a lot higher. And the reasoning for that is, if you look at the long-term chart on gold, just get this up here so you can see what we're watching here. But if you look at this chart on gold, there is nothing bearish about this chart at all, going back 2 years. And we've been very bullish this, and I think we are going to go a great deal higher. Right now we're trading around 1980, I believe. 2010 is the 61% retracement, and we'll see if that's it. But we'll be right back. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hey, folks, we're talking about gold and silver. I posted the chart of the gold, and you can see that it's in a very strong uptrend. But let's just chat just a little bit about silver. This is something that I've been involved with my whole trading career. I've always been long silver. And anyway, in fact, I've sat through corrections of from 49 all the way down to 12 cents because I'm involved in the numismatic end of the silver market. I was fortunate back in 1975 and 76 when I was working, and I started in 76. I got involved with, of course, Bob Gilmillion and Leroy Linhart and Steve Deeds and all these guys. Steve Deeds, and I can't remember the other guy's name, the guy that ran the whole thing at A-Mark Coin. I'll think of it in just a second. But they told me which ones to buy, and I was buying some of the very rarest of the silver dollars that were in bright, uncirculated, but still in the original containers, these little wrapper things that you get from the Treasury, from the people that did the minting stuff, and they were still wrapped. I mean, they're still wrapped in those same wrappers, but that was long before plastic, and so those coins are all they're very, very, very valuable. But I wanted to talk just a tiny bit because there must be a caller coming in. Marshall's telling us that there's a Australian dollar, Gartley at the 78.6. Marshall, I'll try to do that one for you here in just a little bit, but I wanted to finish the silver because the chart to me that is most important is this weekly chart in the silver. You'll see that the market's had this tremendous move up from 11.50 all the way up to $30 an ounce. And remember, the old high back in 2011 was $49 an ounce. Now, there's a possibility, and I think it's a slim possibility, that this could be a top in the market. I don't see that right now. I'm still looking at these charts each day, and they certainly don't give me any indication to think that this is anything other than just a normal little backing and filling after we had this big run up. see here, we didn't even make a 382 retracement here in gold and silver on this last break, and the gold break was, $220. That's a very bullish sign. So those are the things that I'm, paying very close attention to. Now we're starting to see a little bit of movement in commodities. We've had moves, a little bit move up in wheat, little move up in corn, move up in meal, and also in the soybeans. So that's the first time that we're looking at this. I do believe that we're going to see, higher prices just because the Federal Reserve is pumping so much money in this stuff. The money's got to go somewhere. And that's why you've got to remember, keep in mind what I showed you about that chart of the Turkish dollar, because we've been under pressure like this in the U.S. dollar before. If you remember, those of you that have been with TFNN for a long time, you go back about 10 years. Well, so let me see, 2004 or 2005? That's when Mr. Tom O'Brien came out with King Dollar, when the dollar was trading at 73. And, then it went to, way above 100, and it's backed off. So, these things can have big moves. And if the reason for it, who knows? I don't know, but some people probably do, but they're certainly not telling us. That's it. Let's take a quick look here at this Australian dollar. Maybe we can get an idea of, I know there's a lot of resistance in the Australian dollar. The 64, I can see this is there we get this up here. You see this, the Australian dollar is at some pretty good resistance up in this area. You can't see the Gartley that Marshall is talking to us about, but imagine it comes in around that 71.99 to 72 level would be my guess. So the risk there is very, very strong. Strong resistance means you don't have to risk very much, and that's what the whole thing about trading is trade defensively, and worry about your losses, and your profits will take care of themselves. So those are a few things that you want to keep in mind, folks. Regarding the way I do this show here, I know you get tired of just looking at numbers and you're just looking at patterns all the time. So the only way that I can make this interesting for you is to relate how I got to some of these places in my life and how I learned some of this stuff. That's where I think you would gain more than just looking at these numbers and stuff that you probably don't pay too much attention to, but I frankly do. And so I am going to do each day, I'm going to go through how I learned some of the stuff from Bryce Gilmore, Jim Twentyman, all the other people that have, I'm certainly not naming them all here, but I do have a list of John Hill. I mean, just so many of them that I'll go through some of the experiences of what they showed me and what I tried to do with it, and, why I tried to information to what's going on. The US dollar is the exact opposite of the euro, and you're absolutely right. The euro is poised to jump. You'll be able to see this right here when I post this chart here. This is the one. This is where the U.S. dollar is a real bee to trade, folks. It's a tough one, and so it's a biachi, as they say in Italian. But look at this. We've been up here now for 2 weeks in the euro and not backed off. Now the euro is the cleanest dirty shirt among the other currencies, because where else are you going to go if you're not in the dollar? Well, you go to the yellow metal or the silver metal. Somebody's buying the metals, folks. They really are. I don't know if they're doing it through ETFs or physical or whatever they're doing, but the physical price of gold is starting to go higher, and it continues to go higher. Now, we had a 5-day correction that went down to, the low was 1875, I believe, and we've rallied over $100 an ounce in 3 days. So that's telling you that it's not very bullish. So that's the main thing of looking at it. Tommy is saying that it's a good time to see. I don't understand that one or not, but I remember, I believe, Tommy, if I'm not mistaken, I believe it was 2004 is when it was the King Dollar. I've got it somewhere, but I don't know where it is. It's Well, I don't know if I still have it in my computer or not, but I know it was a long time ago, and the market went up, substantially from that level. So that's it. But anyway, the metals look extremely bullish. If you get big breaks in those, you want to be looking to buy them, especially if you get an ABCD structure in there. That's the one you want to be looking for because it'll give you a really good spot, to technically look at a place where you can buy it without risking an arm and a leg. But right now, they've raised the margin to $11,000 in the gold. It used to be $3,500. Silver's $15,000. And when it swings $5 in a day, folks, that's a $25,000 move. So that's why the margin is $15,000 in the silver. But people that are in these markets, folks, most of them are physical. They want to own the physical gold. I talked to my friends over in California that are in the business, and there's a lot of action going on over the last 4 or 5 months in the physical gold market. In other words, they're starting to buy physicals again. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're winding the show up. I wanted to review what we said. Most important thing to look at today is the fact that you're looking at a market that has a potential. We're looking at that Bradley model, and remember, from March the 23rd to August the 19th, it's been going straight up. So if it did it perfectly between March and August, you have to assume that maybe it's going to be perfect between August and December. That's where the thinking comes in. So the key is, if it closes lower this week, it's probably working. So let's remind ourselves of that. Now, there's another market that's making a major price objective this morning, and that is, hold on, you'll be able to see, we just made the 61% retracement today in the natural gas contract. It came in at the exact level of 240, and we're now trading at 236 and change. I think that's going to be the top in natural gas for a while. We've been straight up since June 29th, so we've been up for 2 months. So we should be looking at a correction here in the natural gas. It's also a 1.27 expansion, so that's another reason why you want to be exiting your natural gas positions if you are still long, because all those objectives have been met. If you're looking for something larger, that's okay too. But remember, you might have to set with some little bit of pain here if the natural gas does back off a little bit, and I think dropping back to about 219 would be easy in this type of environment that we're looking at right here. So let's keep these things in mind. We'll be following the Bradley all week long just to see what happens through the 19th of August when we have this last little top that supposedly occurs at that level. It's usually accurate within 2 or 3 days, so we should have a pretty good idea by the end of the week. But if the market closes lower this week, we have to assume that the Bradley model is probably working. So that's the main thing. The gold looks very bullish, folks, for a lot of different reasons. You don't have to be a rocket scientist to figure it out. There's some resistance at 2010, which is the 61% retracement of the down move, but overall it still looks bullish. See you all on the flip side tomorrow, folks.